it's really been a big change where that cross-asset collaboration has not only become it is being forced on the trading desk, but it's becoming an advantage if you're able to adapt.
Welcome to Tradeweb's Off the Desk podcast, where we dive into the key trends shaping the trading landscape. I'm Adam Gould, Global Head of Equities at Tradeweb. Joining me today is Rob Satzger, Head of Institutional Equity Transaction Sales for Citadel Securities. Rob, thanks for joining us today. Great to have you. I think a great place to start would be to take us through your career progression and how you got to where you are today.
No, it's great to be here, Adam, and to have the discussion about the partnership between our firms and our desks and both where we've come from and where we're going from here. I think it probably makes sense to start with, the early stages of my professional career and how I got to where I am today. Early on, I wasn't one of those kids that really didn't know what they wanted to do in college. I opened my first equities trading account at the age of 11 and always sort of knew that that's exactly where I wanted to go with my career, somewhere in the capital markets and trading space. And here I am today, many years later. I think the early stages of my career were very instrumental in both what I've accomplished and hope to accomplish going forward. I was very deep into a challenging landscape from an early stage, working at automated trading desk. So when I was in college at the College of Charleston, I was very lucky to earn an internship with automated trading desk. For those that aren't familiar, they were one of the early pioneers of electronic trading in the equity markets, starting as early as the 1980s. And right from the very beginning of my career there, you're faced with a heavy dose of reality. So when you're an intern and you are challenged with passing your series licensing tests, there's a zero fail policy and you have 1 month to do it. So right out of the gates, really challenging environment, and you're seeing some of the interns and coworkers that you first started with already no longer working with the firm. So,
right. Yeah, it's interesting. The way I started was so different, and we kind of ended up in the same area as far as technology and forward thinking, advancement, et cetera. When I started at a NASDAQ market making firm, and that was sort of the opposite in the sense of it was what you saw in the movies. It was a lot of screaming sales traders and real kind of alpha environment, but everything was extremely manual.
Right.
And when I think back, that was a moment in time that no longer exists. And it's interesting you mentioned automated trading. I went down to visit automated trading at some point with a few people that covered me at Citigroup. And when I went to take a look there, I was excited to see the trading floor. And when I looked out, there were no people on it. There was just a server in the middle of the floor. And I'm like, where are all the traders? And they're like, this is the future. That was like a real wake-up call to me. And that moment always stuck with me because it was so different than anything I had seen before.
Right. No, I think that's very true. And it was sort of forward-looking company in terms of how equity markets and market makers and proprietary firms across the street trade now. They look a lot more like an ATD used to than a NASDAQ market making floor.
For sure.
Which essentially no longer exists to this day. And I think that something that really, from a more personal perspective, really helped me with facing those challenges early was my upbringing. And I was very involved in competitive golf from an early age, and facing that constant challenge, constant state of improvement really helped me with my career growth and something that I still fall back on today. It also opened up a lot of doors for me at an early age. And you and I have discussed this prior, but when I was 21 years old and just breaking into Wall Street, even though it was in Charleston, South Carolina, I was invited to many industry outings and put forward as the face of ATD because there weren't, luckily, any other senior golfers at the firm.
Right.
So from a 21-year-old kid's mindset, showing up to these events with CEOs and CIOs and heads of routing and having to be the face of the franchise, it was instrumental in developing a lot of relationships early on that I still utilize today, and also that are key partnerships and friendships that I hold near and dear. And I'm sure you still have a lot of those that you remember from your early days as well, and both on the business and personal perspective.
Yeah, for sure. I mean, I drag my 7-year-old kids to the driving range all the time, and I think they'll thank me one day. But at the moment, it still moves a little slowly for them. But yeah, it's just super interesting because you talk about that training class and kind of people not making it. And it was the same thing where I was. There was a new training class every 2-3 weeks. Where we were, it was more kind of, I think, an EQ thing than an IQ thing, in the sense of, to survive, you had to figure out what did you need to do to add value to the trader in a fast moving market. And that was certainly the end of an era, but it was not coding or programming. It was like having a full glass of water in front of the trader at all times, right? Or
Right.
reading prints on the tape, right? And making sure that any block that went up in a certain name was sort of broadcast and nobody missed it, and
Right.
just super interesting because it's like, the same kind of things were going on, but just in completely different ways.
Right. It's interesting you mentioned the programming side of things. So I come into automated trading desk as a former athlete and a international business major, not a computer science major. But at ETD, you were immediately supposed to learn how to program without any courses or anything. You were supposed to use internal resources and just put in the time and effort yourself to learn. So put that all in a blender, and within the first few years of my career, I was learning proprietary trading, wholesale equities market making, automated trading strategies, and all of this in such a short amount of time. So really just diving deep into a lot of key components that I still utilize today.
So that's super interesting, Rob. It'd be great now if you could kind of run through how you got to Citadel and what you're doing there and what themes are pushing all the advancements you guys have made in the businesses you're involved in.
Yeah. So later in my career at ATD, I decided I was ready for my next challenge. And luckily that aligned with the time that Citadel Securities was looking to enter the block equities market and in the ETF space. And when Citadel calls, you answer. It's a transformative firm that has a unique liquidity offering and liquidity solutions. And as a one-of-a-kind place in the industry, it's something that Citadel understands is it's one thing to have a strong work ethic and really be able to put in the hours and just pure manpower. But when you combine that with an innovative technological offering, you can really achieve great things. So that's been something that we've been really focused on is how to decide on these new business ambitions. How are we going to tackle them? Putting together a business plan and really going after it. And so as you're aware, in 2015, when we came over and we started having our first conversations, we put together a business plan to say, this is what we're going to build on the block ETF side, and we'll go from there. But we'll do it in a methodical way, and we'll get to a place where we're best in class in a product before moving on to the next one. So that's kind of how Citadel Securities enters a business. Is they put a lot of time, a lot of effort to analyze the space, analyze the opportunity set, build out the exact framework of from the first inning to the ninth inning of how we're going to address both the opportunities and challenges and go from there.
Yeah, I mean, one thing that I always love about Citadel, and I try and kind of think about this in life, is like the preservation of the status quo or moving sideways, right, is not like the strategy at all. It's how do we improve? How do we innovate? How do we do what's best for our clients? Like, let's play offense all the time, right? Which is fantastic. And it really, I think the same themes run around Tradeweb. Again, I mean, it starts with the client.
Exactly.
Billy Holt, who runs the company, he always says client connectivity and innovation, right? And those are the things that we think about. Clients come first, and then how can we make their workflows better? How can we set things up so that they'll get better prices? And how can we solve for their needs and streamline their workflow?
Right.
And those themes seem like they run at both firms.
For sure. And I think the thing that both firms clearly recognize is that you can do a lot of that work on the front end of analyzing the opportunity and the challenges, but that might be different tomorrow. and clients' needs change day by day as well. So you have to be able to iterate on these processes over and over and over as things change and as the landscape develops. And that's something that I think both firms have been on the leading edge of.
Yeah, one thing that we talk about all the time, you and I, is if you're automating something, right, I think the conversation changes. It doesn't get eliminated. So when I think about my first job at the NASDAQ market making firm, the sales trader got a phone call. He yelled it over to the trader. The trader then sort of did what he needed to do or she needed to do in the market, relayed it back. It took a lot of time, but a lot of the communication during the day, both internally and externally, was making sure that the details of the order were right. Now, if we can automate something like that, it gives us more time to talk to the clients about ways to improve processes, trading strategies, and all sorts of other things that I would view more as alpha generating than beta generating.
Right. One key thing that, and a great story that you and I have discussed as well in the past, is when we first decided to enter this space and we lay out the plan to management and we get approval to proceed. This was, I think, on a Thursday in 2015. We get approval from management, and then that evening, Friday, Saturday, Sunday, our development team stayed, worked day and night. And on Monday, we show up and the first beta version of a key aspect of our block business today was rolled out over the weekend.
Yeah, that's
so
awesome.
In 3 days, we're able to develop an entire system for a new business. And I think that is a good example of something that Citadel Securities is able to do. And it wasn't because these developers were under a deadline to deliver. There was no deadline to deliver. This was a forward-looking leadership on the development side where they said, you know what, we are all bought in on this opportunity. They were involved in the business building decision, and they're just excited about the opportunity ahead of us. So
right.
that sort of complete buy-in at a firm level is unique, I think.
Yeah, that speaks so well to Citadel, and I think we're good at that at Tradeweb as well, right? I mean, we want everybody who has any part of the process to understand the business, why we're doing it, and to know that we're all going to participate if if things work out, and we're all going to be accountable if they don't.
Right,
So.
Exactly. No, I think we see that from the Tradeweb side on the more the BestX side of the business as well. When clients have needs, they've approached us, they've approached you and said, this is what we're looking to do. This is what we're looking to measure. And you guys have been incredibly responsive on that front. And that's feedback that we constantly get about Tradeweb and your product.
Yeah, it's great to hear. Yeah, the partnership has been great. So specific to ETFs, why do you think the partnership has worked really well?
I think that, well, a few things. As I mentioned before, when we get into a new business, we really focus deeply on that. We're not spreading ourselves thin across a lot of different things at one time. So why does that work? And why does the partnership between us work? Is a lot of those products are the same ones that you guys are focused on.
Right.
So if we talk about the ETF space, we talk about the ADR space, the credit space, all of these are products where Citadel Securities and Tradeweb are leading efforts to both grow and expand and make unique offerings to the space. So just that alone creates a partnership between the two if we're able to utilize it in the right manner.
No, I agree. I mean, when we get on the phone to talk about something, we bounce some ideas off each other. I usually learn something on the call, right, that we can apply, and hopefully you learn something from me once in a while as well. But I think, it's a good fit for sure. So.
Yeah, and I think that the one of the other things that immediately comes to mind is we're looking to provide a best execution for the client every single time. You're looking to provide a best liquidity solution to the client. So if we are on your platform and if we are trading with clients, your client's going to likely have a better experience in the competitive landscape. And the better pricing on your platform, the more clients are going to use it. Right. So that inherently is why it works between the two firms as well.
One of the things I've kind of witnessed and enjoyed watching over the last number of years has been the growth of electronic trading in the ETF space. And that has happened on the buy side. It's happened on the sell side. It's happened with how the buy side communicates with the sell side. you have really been at the epicenter of that evolution. So I'd love to get your thoughts on what you've seen and how it's progressed, and potentially, is there still room to run?
Right. Looking historically, both at buy side and sell side, as you mentioned, they've been heavily siloed off between asset classes. So there were the credit traders, there were the rates traders, there were the equities traders, there were commodities traders, you name it, right? And they didn't talk to each other, and there were walls in between. And I think ETFs have really been at the forefront of forcing this environment to change, because ETFs inherently have every single product as an underlying holding. So there could be a single ETF that holds any of those asset classes we discussed, including commodities, crypto, equities, options, overlays, you name it.
Right.
That's something that every single trading desk is starting to have to face. Some better than others, but it's really been a big change where that cross-asset collaboration has not only become it is being forced on the trading desk, but it's becoming an advantage if you're able to adapt properly to it. So our sales side and our trading side have really been supercharging that collaboration, and I think that's been a key success for us is not having, I need to call over to this guy on this desk or this guy at this desk. We're one desk. We have to we have to go after each of these challenges together, or else we're going to fail at all of them.
Yeah, I agree. I mean, we've seen the same thing. I when we talk about fixed income ETF evolution, used to have an ETF desk on an equity floor at a bank, for example. And regardless of what was in the underlying, the client went there, and then they could either make the market or would have to call their fixed income guys or girls on another floor, or reach out to the commodity people or the options people, et cetera, et cetera. Now those inquiries, and I think with the help of the RFQ platforms, but also because the market has forced it that way, are going directly to those that make markets in those underlyings. On the buy side, we've also seen if fixed income money managers and traders want to trade a fixed income ETF, so what that it looks, feels, and settles like a stock, they should be innovative enough to figure out how to trade that on their own. And it makes sense for them to trade it on their own because they're the experts in that asset class.
Right.
So, that development continues to go on. That's been super interesting to see. And, that'll certainly be a trend that continues, right?
Right. And I think it's important to note that it's one thing to say we need to adapt to the times and we need to have cross-asset collaboration and multi-product sales efforts. It's another to actually put that into practice.
Right.
You have to find exceptional talent that can handle all of these different conversations and all of this interaction between so many different trade desks. One day you may be talking to a muni desk. The next day you're talking to an FX trader. And you just have to be able to morph your knowledge between the two and have at least a top level understanding of what it is. You're always going to bring in the product expert when needed, but you can't be completely clueless in any single area. And I think finding that extraordinary talent is the true challenge right now.
No, I agree. I mean, you have to find the talent, and then you have to kind of get people out of the mindset of, well, we've always done it that way, right?
Right.
And, Citadel and Tradeweb are certainly firms that to a certain degree ignore we've always done it that way. If there's a better way to do it, we're going to do it that way. But, there is a lot of that around, which makes it a challenge.
Right. It probably dovetails perfectly into the growth of ETFs generally.
Yeah.
Right? Let's just look at the 10 years that I've been at Citadel Securities and that we've had the partnership between the desks. ETFs have gone from a little over, was it $2 trillion to over $9 trillion. Just looking at U.S. ETFs.
Yeah, it's unbelievable.
The growth has just been absolutely incredible, which from, I think, both of our perspectives creates huge opportunity, but also huge challenge.
Yeah.
How are you going to be able to manage the growth of the RFQs, the growth of just pure trading in ETFs? I could tell you from a Citadel Securities perspective, it wasn't going to be by hiring 50 sales traders, right? Like that's not an approach that we have ever taken or are going to take.
Right.
So it's finding, again, back to our previous conversation, extraordinary talent that can leverage their knowledge of the space, but also drive innovation in the space. And that's an area where our desks have really collaborated on. And if you want to discuss kind of how you first launched the API trading and how you thought about, let's take this from a voice trading system to launching an electronic trading platform.
These are things we're thinking about all the time, of course. How can we make it easier for the client to trade more with less? So some of that is just pure click minimization. Some of that is a rules-based automation of the RFQ that can either be done by clicking one button or actually having the order management system at the client read it and then have it automatically go out. And look, different clients are looking to progress at different rates. So, we want to offer all of these things. As I'm sure if you have a big client that's desperate to transact over the phone, you're probably not going to turn the business away, even though it doesn't fit into what you normally do. But just, super interesting. And look, I'm always saying ETFs are such a cool product for a few reasons, but they dovetail into the challenges around building an ETF business. When we kind of at 9:30 in the morning, and now there's kind of trading all around the clock, but when things really kick off at the open, we'll have an RIA in Austin, a private bank in Weehawken, a Danish pension fund, a London hedge fund, a traditional asset manager in New York, another one in San Francisco. I don't think there's any product when you look at our 25 most active clients where it looks that way around the firm. You've got huge custodians that RIAs are at. It's really cool. And it's fun, right? Because the meetings aren't repetitive and the pitches aren't repetitive, but it's also different because, again, the pitch is different. The personalities are different. And then for ETFs, you've got a lot of use cases, right? Some, but not all, would be cash equitization, managing tax positions, hedging a portfolio, doing a pairs trade, making a tactical trade. And again, some of the clients that we have are going to be able to do some of those things. Others aren't. So it definitely keeps you honest and on your toes. I think about a trip to Boston. We may have 6 or 7 meetings over 2 days. And it's really kind of a different topic and a different level of sophistication, from meeting to meeting, right? Which is really cool. I don't know, it makes it fun for me.
Definitely. And I think that with that growth and the usage from so many different types of clients, it created a real need for more technological improvements in the space generally. And that's been an area where, we worked with you guys on being one of the early pioneers of auto quoting and auto executing. So what does that mean? I think it's probably best to describe what it was like before we created that.
Right.
So before that existed and before Tradeweb platform was in practice, a portfolio manager would make a decision. I want to put on risk or I want to take off risk. That order would go to the trading desk. The trading desk would then call market maker number one and say, I want to buy or sell X amount of shares of this ETF. Hopefully, he says the right ticker and puts a B instead of D. Hopefully, he doesn't forget a zero or add a zero, because we've all seen that done before.
Right.
And then he gets the price, and then he calls market maker two. Meanwhile, the ETF could have rallied, could have dropped for or against, but prices are changing constantly. Goes through 3 market makers and then makes a decision for one trade. Right now, with all of the technological improvements, we've gotten to the point where, we were just discussing this earlier, but average trade size is 2 million notional, roughly.
Yeah, about 2 million notional
on the Tradeweb platform. Shares. From our perspective, that's not one that is best served by manual interaction and by manual pricing and executing. So we created a platform where we have auto execution, auto quoting, where the trader puts through on the RFQ platform. It comes over electronically to our pricing engines. Within milliseconds, you're getting a price back. The trader then has all of the competitive markets displayed. They can then hit or lift the best price, and then electronic order comes over to us, and it's auto executed. It's swept in the market, printed to the tape, and on our risk, and the trader has their fill back.
And nobody's touched anything.
And nobody has touched anything.
Yeah.
So all of that can happen within a second, and they can also execute baskets of trades that way. Now, one key thing to focus on, I think you and I are aligned on this clearly, is we're not trying to automate. Well, it's definitely not trying to automate myself out of a job, but not trying to automate the street completely out of human interaction. It's actually done the exact opposite. It's really allowed us to focus on those consultative, constructive conversations with clients at a much higher level than where's your bid and offer on a 2 million
Right.
notional of an ETF, right?
Yeah, exactly.
We're having broad-based conversation with CIOs of model portfolios, of different players in the space and how they want to proceed on rebalances, instead of really spending time on this sort of more trivial daily tasks, especially as RFQs have gone from the hundreds of in the count range to thousands per day.
Yeah, no, I agree. I mean, look, we were always having those higher level conversations, but as the market got busy, which it always tended to do when you were going to have those conversations, you ended up spending the day doing the blocking and tackling that was required. Right. And then the time to have the important conversations to really improve the organizations in the process became sort of less, right? So now there's more time to do that, which is great, And I think at the end of the day, the winner really is the end user,
For sure. The best X that they're achieving, not only they're not checking a regulatory box, they're getting better pricing in a competitive environment. They're scaling their business as ETF assets continue to grow and their RFQ accounts continue to grow. And one other key point that we didn't touch on yet is how much it reduces the risk of manual error.
Right.
So that's something that the entire industry is so focused on right now. Every single time one of these large ones occurs, it hits the news. It's on Bloomberg. It's on every sort of press that there is. And that's something that every single company is investing in, is to remove that risk.
Yeah.
So by having these automated processes and not having both a trader and a sales trader at risk of manually interacting with the trade, that risk isn't gone, but it is significantly reduced.
When we talk about integration, we talk about the order going from the client's order management system into Tradeweb, out to Citadel, and back through without anybody touching anything. We're integrated with 100+ order management systems. That can take a couple days. It can take a couple weeks to get that set up. As somebody who kind of gets as big a rush of getting a trade over now as I did when I was right out of college, we used to have the debate, should we try and get someone to use Tradeweb not integrated so they can get the benefits of the competitive pricing and the audit trail, and then in parallel work on the integration? And, it was a debate because the platform's better and the process is certainly better when one is integrated. I would say we got half the people to start non-integrated 5 years ago, and then usually if they liked it, they would integrate. Now, it's a non-starter, right? Nobody's coming on manually. Everybody has to be integrated. That's just the way the world's moving. So when I think about that first job that I had, and it was crazy on that floor. I mean, it was a lot of fun. It was kind of the stuff I saw in movies and read about in books. I never thought that I'd be kind of heavily involved in integration and audit trails, but it's the way the world works. It's what the demand, that's where the demand on the buy side is, right? So, you have to provide that, and obviously good pricing starts at the beginning, and, if we can have a little fun along the way, that's great too. But, the world has changed, right?
Right. I will say similarly, the trading floors at Citadel Securities are much quieter than the ones I experienced in the past.
Right.
When we launched in 2015 and I'm screaming over telephones and over video conferences, it was a bit earth-shattering for the trading floor. So I think they're excited by the auto-executing and auto-pricing methodology. It's sort of a win-win when it comes to that.
No, and the personalities have probably changed a little bit too,
For sure.
So I think 100% of the people, which actually kind of gives me pause, but not really, believe that ETFs are going to continue to grow, right? They'll be allowed in different types of plans. More investors are getting comfortable using them. So I'm glad we're on the right side of that. Specific to Citadel, what's next in ETFs for you guys?
Continuing to scale is what we're focused on right now. Scale while improving our unique liquidity. a good example is in the fixed income space right now. Fixed income ETFs continue to grow to the many points that we've discussed already, whether it's an insurance company starting to trade it, whether it's hedge funds utilizing it as short-term exposure for risk, you name it. There's so many different uses of ETFs. How are we trying to get better? We made some pretty significant changes where now our credit traders, our rates traders are now directly involved in pricing our fixed income ETF instruments. It's a big change. It's another example of sort of that silo that we discussed previously being broken down. ETFs are an equity product, but they have fixed income underlines. So now at Citadel Securities, we have fixed income traders pricing an equity product.
Yeah.
That would have never happened 10 years ago, right? And it's all for the better of the industry and for the better of the client experience. And that will show up as better pricing on your platform.
Yeah, I mean, one thing I really admire about you guys is when you set your mind to doing something, like you're not going to take anything but the best as the end result. So, we entered the ADR space less than 2 years ago, and you guys were kind of there, not on day one, but, kind of close to the beginning, and, you're doing kind of unbelievably well, right?
Right. That's another example where we're able to, again, cross asset and cross business collaboration where we have this unique pool of liquidity in ADRs. Let's discuss sort of the retail volume that we trade. It's in the press a lot. We're in the mid 30% market share of retail wholesaling liquidity. And what that means is that's a lot of inherent and unique liquidity that we have within our door. So how can we package that together and create a block offering in the ADR side? And that's where we've been key market making liquidity providers on your platform and have watched the growth and hope to continue to see the growth on that. It's another one where I think that when we look at each specific area, that was one that we targeted. We said, this is what we're going to focus on. We brought over some key hires, both on the trading and sales side, and we're attacking it until we have a best-in-class product. And that's, to your point, sort of how we attack each sort of opportunity and challenge.
I know you were in Asia fairly recently. Are you guys sort of looking to be everywhere, or what's the international plan?
Right. It's certainly an opportunity for expansion, both on the ETF side and equities in general. I think you'll see us have a much bigger footprint in the client-facing businesses in the international space, in the not so distant future.
On our side, one thing we're really focused on is to automate these RFQs for clients that want it as much as we can. In Europe, about 85% of our trades are automated on the ETF platform, 21% of the notional, so the big trades are still being handled by traders. In the US, that number is less than 10%. So we're really getting out there now and going to focus for clients, again, that want it, where we can improve their workflow on automating some of those RFQs. We've also set out the goal of 100% integration. So every client, we want to have them integrated. Again, if we can minimize clicks, minimize a chance for an error, we think that benefits everybody. So we're super focused on that as well. And, just if everyone's right and kind of the trading continues to increase and ETF usage increases, the more scalability, the better. So, we're excited about it. And obviously you are too.
Yeah, likewise. I think as that continues to expand, it creates a more robust industry in general, where if volatility picks up, you're not as concerned about the time to trade and your best X, achieving best X. It's more integrated. There's less time spent trying to transact on the trade and more time spent on how should I think about the path forward and the current risks to the market.
Yeah. So Rob, as we kind of wrap up here, obviously kind of massive growth in ETFs across the industry at Citadel, at Tradeweb. So many things have happened that I think, in a sense, we planned for, and other things have happened that, we didn't plan for at all, and we've more reacted to than planned for, if we were being honest about it. Anything that stands out to you that's been kind of really surprising over the last either, 2, 3, 4 years in the ETF space?
A few. I think the way that trading firms approach ETFs in general has changed pretty massively. You look 10 years ago and they were almost treated like an equity,
Right.
traded just like a single stock. They're not. They're traded more as a basket level. Clients used to be very concerned when there was low secondary volume. So if there was an ETF that just didn't trade that much during the day, people would shy away from it. Now they're understanding that an ETF may trade 1,000 shares a day, but the underlying basket of that ETF trades billions of dollars of notional a day. So you can transact hundreds of millions of shares in this ETF with very minimal price, even though it looks like it doesn't trade that much.
Right.
I think that sort of education has been out there and is starting to succeed. One other that comes to mind is during COVID in the bond space, ETFs ended up being a better liquidity instrument than the underlying bonds themselves, where there were just no bid scenarios in the cash bond space.
Yeah, they were definitely the leading indicator of what was
Traders
going on
were
in the
actually
market,
using
right?
ETFs as the indicator of where things should be trading, which I think is just a fascinating example of how well some of these products trade.
No, I agree. And I think, the sort of two-way interest in these ETFs fits into that. As an equity guy, I'm always complaining that the bond market's closed, right? But the equity market's open. And, I feel like that happens 20 times a year. I think it's 2 or 3. But what's interesting now is those fixed income ETFs, even if the bond market is closed, the spreads really don't widen and they trade a lot, right?
Yep.
So that to me is super interesting. And I haven't run the numbers lately, but the ratio of secondary market volume to creation redemption activity in the primary
Right.
market, I'm sure has gone down dramatically as well. So that's a testament to the product and how it's been embraced. Another thing that I kind of think about is it's interesting, right? In Europe, ETFs started institutional, and now we're making a lot of investments in central clearing and focusing on retail there more than we ever have. In the US, I think on the most part, ETFs started with retail. It was an opportunity to invest in a strategy or in bonds or in gold or in something that someone with a Schwab account may not have had access to do, but it looked, felt, and settled like a stock. Over the last number of years, the way institutions have embraced these ETFs, we started to see it. But I mean, if you look at 13F filings, I mean, they're really being widely used as a tool, again, not as a strategy. But, whether it's equitizing cash or expressing a tactical view or as a placeholder or as a hedge or, one of the many reasons, we also see a lot of these institutions launching their own ETFs, right? So,
It's a dynamic environment.
Yeah, so they're making the bets, right, that, this is the wrapper of interest moving forward. So, that's exciting kind of for all of us in the space.
Yeah, at any point an RFQ or a trade could come in from a pension fund,
Right.
from a retail investor, from a hedge fund, from
Right.
you name it.
Yeah.
You don't know who the next person to trade is, which I think keeps it very, very dynamic and constantly changing and forcing both our firm and yours to iterate on improving the product constantly.
Yeah, you referenced like 2020, 2022. In conversations with clients after the fact, those that were not set up to trade ETFs were frustrated that they didn't have that vehicle. So it's admittedly self-serving to a certain degree, but we're encouraging all clients to get set up to trade ETFs, even if they really believe they're never going to trade one, because you never know what happens in the market. And, and it's a tool that I think people want to have in the toolkit at a minimum. So, Rob, before we wrap, going back to the beginning, what would the 11-year-old Rob Satzger who opened up that trading account think about where Rob Satzger fits in the industry today?
I think it's incredible to think about the amount of challenges that I've faced throughout my professional career, and opportunities and doors that have been opened. Some of the neatest things that I've had in my life thus far have occurred because of these jobs and opportunities I've had in the industry. A couple of the highlights that I would say is, one of my childhood heroes, Jack Nicklaus. I was able to interview him at one of the Citadel Securities, annual conferences.
Yeah, it's incredible.
That alone was incredible, but the amount that you can learn from some of these non-industry leaders and people that you really look up to goes a long way in how you evaluate your own measure of success. And then the other is just being able to, when I'm in an interview with somebody and they say, what is the experience like at Citadel Securities? And I can genuinely look them in the eye and say, I've never had a boring day at Citadel Securities in my 10-year career without even batting an eye. Like, that's a pretty neat experience, and hopefully look forward to many years to come.
And I think we touched on a lot of interesting topics, and it's always awesome to see you, and look forward to continuing to innovate in the space together. Thank you.
Thank you, Adam.